So if we move to the daily chart, we keep our level. We actually can see that they are accurate on the daily chart. And also, if we zoom out, we also realize that the chart doesn't go far enough to actually give us a previous low, which doesn't exist on the daily chart. So different things that the chart can show us, which would maybe caution us on trying to go long too quickly. So if we analyze the chart with trend channel, we can actually draw this one here, and normally it should go all the way here because it's the low. But something that is interesting is that if we draw it at that level here, we see that where when the price reached the lower channel line, instead of returning back up to the high line of the downtrend channel, it actually gapped down right here. Now, usually when there's a gap in currencies, the market has a tendency to try to fill it up. That means that where the price is right now, the tendency will be to go back up and try to fill that gap, and then maybe resuming going down again. If he does that, he will potentially reintegrate that downtrend channel, and could potentially go back up and try to go into consolidation period, or go back up to the high level, to the high line of the trend channel, which would be healthier for the downside. Of course, the high of that is at 126 right now. Every time it does that, you may be looking at 125, which is quite a big move back up. So, but we could potentially see that the market would actually go back up to fill that gap, and that would be a move as it stands now to at least 120 pip up, and potentially would 120 pip up. Now, due to the fact that also we're getting too close to that level of 1800, 118 figure, and this is a very strong support level, as we saw in the weekly and monthly chart. This could also add to the idea that the market may actually go back up first before it can go back down again. Okay. Another thing is that we can draw another. I hate when this thing does that. Another trend channel here. We'll try to make it better now. And this one here is actually an acceleration, and what I'll do is I'm going to change the color of it so we can actually see it better. I put it a bit higher. Okay, so in that downtrend channel, the price created also inside it another downtrend channel, which is of a higher pitch. So we call that acceleration. And what is interesting about that acceleration is that its low point is around that 1800 level. So that's technically it's another level, another element to tell us that, hey, you know what, this level 1800 is quite significant if it breaks, but also that it could actually hold and then go back up from there. So maybe not be so much in a hurry to join the bandwagon and go short on this one, because it would actually be risky, and the market may actually take a breather out of this and say, okay, let's wait a little bit and maybe let's go back up and go from there. Okay, so it's quite possible that this could actually happen. Okay, so what do you do if you're trading on the if you are trading on the daily chart? Same as what I said for the weekly chart. You have to be cautious, and you have to be patient. So let's go closer and see what are the options that we would have. So maybe we'll clear things up a little bit, and I will delete that. We already know more or less. And then I will clear this as well. We already know, well, it goes to 126, so we already know. All right, so when we look at the chart and we look at Trend Dragon, did not create a line of support right now on the daily chart, so we don't know which level to break based on Trend Dragon. But if we look at our regular level of support and resistance, we know that 1800 is a strong level, and that breaking that level would be potentially significant. Here's the thing again, if you want to enter the trade, and let's go back to the drawing. So the first thing is, let's say that you want to enter at the break of 1800, considering that this little 4 days here with a bit hesitation, not really not very strong, big strong days, you consider this as being a consolidation period. Okay, fine. And then you enter here, then what you would do is you would put your stop loss at this level, or maximum you would put that stop loss above the Trend Dragon trend line. Okay, because what would be concerning about a breakdown of 1800 without any retracement is that it could be a false break. Okay, and false break happen, what would happen if it's a false break? Then it would go back all the way back up, and then you would be losing a lot on your trade. So you want to make sure that you protect yourself and that you put your stop loss at the next logical level of resistance, which would be either here or even potentially here, but that's pretty high. Okay, a very tight stop loss would be to put it here, which is a previous high or curve, but it's quite tight. If you enter at the break of the 1800 without any retracement, then I would recommend to protect your profit, because you will have some profit. I mean, if it breaks 1800, there's going to be a psychological level where people are going to go and going to enter. Also, there will be some stop losses that will be triggered, and so you could expect the market to go down. Now, how much? Don't know. So if it is not If it is a false break, this is what will happen. The market is going to go down. Oh, let's go back to drawing. The market is going to go down briefly and go right back up. Okay, so you need to protect you against that, which means that if you make 50 pip out of this, um, just make sure you protect your profit, um, and then you get out quickly. Or you can enter with two position if you feel that it's going to be a big move, which it could be. Then you enter with two position. One you get out with some profit. The other one you go into break even level, and then um, in the hope that it would work. Now the best case scenario in this case is that the market will go down, retrace to this level here 1800, and then goes back down again. You would have a confirmation that this is not a false break. Now in this case scenario, this is the most conservative one, and what you would want to do, the best conservative way to do this is to wait for that to happen and enter after it breaks that newly lower low, and that you will have basically three reason to entry. First, it broke a significant support level, retraced back to it, and basically respected that level, come back down and breaks a newly created lower low, and that would be quite a good case scenario for it to happen. The best case scenario, the best case scenario is for us to wait on the daily chart for it to retrace either to this level or all the way to this level. Possible because this is a level of resistance that has been created here. Okay, it can retrace all the way to the trend dragon trend line, which would be pretty much what we would be expecting, but could potentially retrace all the way back here and then come back down and break that level. In this case scenario, it would be feel more comfortable to enter at the break of the 1800, because you would have had a build up to break that level, and basically a confirmation that the market is ready to move back down. Okay, so I hope I'm making sense into that. But it seems it's quite obvious when you look at it now, where we are. So this is if you want to enter on the daily. On the daily. Next one we're going to talk about. The enter in the hourly. If you are able to stay and watch the market at least every 30, at least every hour, better every 30 minutes to make decision on this.